Hello, my happy traders. Another week down, another sucky week. But today we are going to review the overall markets. We're going to take a little bit of a bigger picture today, figure out what's actually going on in the markets. What are we in a bear market, or is this just a pullback? And then we're going to dive down specifically into some of the stocks that we cover on a weekly basis. My name is Sheldale Trades. 12 years trading in the markets. I am here to help you succeed, so let's do it together. Before we get into things, just want to quickly pitch Patreon, making some really exciting updates here. Come check out my Patreon. It will be the first comment in the video's pinned comment. If you join for free, I every month will put in my watch list, updated watch list. So just join it for free. You get that. If you do want to become a paid member, you can support the channel. This helps me on the track to get TradingView paid account, so we can look at charts better together. Canva to make my thumbnails a little better, and so it just helps support the channel, help me create more of these videos, show me that these are what you guys actually like. So go check that out. Let's hop into things. Another very bearish week in the market. Obviously, we had a big flush out. Is it the final flush or not? We can figure that out, but we're still just seeing extreme fear levels. I think typically I would call this as a bottom with being so fearful. But what we really look at the markets, what's going on is it's not tariffs. It's not, war happening in Europe. It's uncertainty. The markets do not like uncertainty. That's the first pillar. The second pillar is the government spending less. So uncertainty plus the government possibly spending less. Plus there's some other things, but those two main uncertainties are pulling money out of the US and is currently going abroad to other markets. Why is it going to Europe? If you go to any European market, you say they've been on a run recently. Why? Because those markets and those governments are now flooding their economies with spending, with defense spending, with trying to reaccelerate their economy that has been down for years and in really a really long bear market. And so we're seeing money start to get pulled out of the US because it's been the safe haven for basically since COVID. And we're starting to see some of that money deployed. Will that money come back to the US? We're going to have to find out. But that's why I think this bearish reading in the first place, I don't know, because I think a lot of money is leaving the US. Doesn't mean the US will not succeed, but I don't think we're getting potentially 20-30 or 20-30 increase in the market this year in the indexes. Another thing we like to look at here is a put-call ratio. So we saw the put-call ratio go up to 83. We are now at a new high, or we tied the high of this most recent pullback. And so we started to see a little bit of a short squeeze today on Friday. Second green Friday in a row. We'll see if that continues into Monday. We have the FOMC meeting. They're going to give us some insights on Wednesday. Put that on your calendars, guys. Wednesday. They're going to give us some insights on interest rates. Are they going to do any cutting? Is it this next month? Or are they going to still maybe push it to the summer most realistically? But this is high, but I like it higher. So like, for example, August 8th, 2024, August 6th, 2024, we got above a 1, or close to a 1 rather. I still think that this put call has a little bit more way to run on the downside. When we get to the charts, we'll see why that might be. I'm going to go through some really important chart patterns that you need to be aware of. But let's go into the AAI, same thing as the Fear and Greed Index, guys. Just a lot of fear. One of the really important data points I saw online recently is that when you kind of break out Republicans and Democrats have been extremely bearish, and they are feeding into some of this bearishness that's getting pulled through these consumer surveys. And so although this is still, I think, a good sign of, okay, contrarian indicator, we need to start being on alert. If there's some stocks that have sold off a lot, let's start building some positions. That's not changed. But these are a little less reliable now because of the uncertainty. People are just really bearish. Businesses are, cutting spending, or they've done a bunch of imports before the tariffs came in, and now they're slowing their spending for a little bit. So there's a lot of uncertainty about growth. And when there's uncertainty about growth, money leaves. And sometimes the market can pull back and stay kind of in a holding pattern for a little bit. So we're going to take a look at that in a second if that's true. And the last one that we always look at is smart money, dumb money. And so kind of similar to the call put call ratio, there's still not enough dumb money leaving the markets. I've seen so much buy the dip online this week. Buy the dip from CNBC, buy the dip from YouTubers online, buy the dip across social channels. When people are still saying buy the dip, for me, that typically means that we have not found a bottom in this correction or pullback or potential bear market, which we'll dive into. But again, like when we go back to that bear market last time, we started seeing readings in like the twos. Where are we at right now? We're at 1.15. So this does lead me in the direction that although this was a really gnarly correction and a lot of stocks have pulled back, if we get a little, short squeeze, we could have one more leg down, and we're going to dive into the why. So let's go on. The first thing I want to look at is the SPQs. I made a video about this, guys. If you're not following the channel, follow the channel. I post shorts every single day, giving you updates on the market. And I also have been starting to post images of things to look out for. For example, yesterday, I posted, we're most likely going to have a green day on Friday because we're seeing divergence on the 4-hour. Guess what happened? The market ended 2.5% up. So follow the channel, watch out for the posts turn on your post notifications, because when I post, it's really important. I just don't post a bunch of dumb shit like 5 best stocks you must own right now. Like, there is value in that content. The first thing I want to look at is Elliott wave theory. So I've seen a lot of commentary out there that, we're actually like the bull cycle's over. We're now heading to a bear market. The top is put in, and it's like, okay, is that actually true looking from a technical perspective? One of my favorite long-term indicators to look at is 5-wave Elliott pattern. And so basically what this does is I think it's the best used in very long-term settings. And I'm using 2020 as the start of this because it was such a violent pullback in the markets. And so we had this one long, we had a 2 pullback. 3s are always the longest in Elliott wave. So to kind of confirm that this is an Elliott wave pattern, we typically want to see that 3 wave the longest. I just messed this chart up. Let me see if I can move it back. I'll have to find the top there in a second. And then I do believe that we hit the 3 top, which was the longest wave, and now we're on a 4 pullback. We're going to look at the Elliott wave more specifically to figure out what we should look at. This is going to be, I'm going to summarize this. So we have 1 wave up, 2, 3 is the longest, 4 is an ABC pattern. Okay, guys, whenever we have a pullback in the Elliott wave, this is a correction, we see an ABC move. Okay, we always see this in Elliott wave. And for the 4 pullback, we can't have it go below the 1. So let's look back at our charts. We can't have this 4 go below the 1, which is really important. The second thing is these 4-wave patterns typically fall within this window. I would say a 50% is a pretty decent pullback, but we could also a really high likeliness that we fall in that 0.382 pullback window. And so I do believe we're still in that. And if we start zooming in a bit, so let's go, actually the second thing before that, let's go to the weekly chart. So I do believe we're in the 4th pullback in that wave. Second thing I want to look at is the Wyckoff distribution. This is another really important big picture indicator to look at. And so basically, and we're going to show how the stock market is so close to this right now. So we have basically the stocks move up, come back down to the bottom of the range. It breaks above, fail breakout, comes back down, tests the lower channel, sees a little bit of boost, breaks below the channel, comes back up, tests the channel, either test or break above, and then flushes. And that's the start of the bigger correction. Now, when we look at the SPY right now, we had a move higher basically to the top, right? We saw the pullback. We saw a breakout of the top, a fail breakout, a flush below. We did see this when we look at the daily. This came back above. We don't know if it actually came back above yet. It might have come back to the range. I think maybe we haven't actually. And then from there, you start to see this wave lower and potentially another wave lower. So we need to keep track on what happens here, because if we start seeing the Wyckoff pay attention or start to happen, Wyckoff, then it starts to destroy that. This might break the Elliott wave theory. And what's important about the Elliott wave theory is if it breaks below the 1, which is way back here, which we'll call 48.16. If it breaks below that, then basically, the Elliott wave is washed. Typically, we don't break below the 61, and that 61 often doesn't happen. Most of the 4-wave pullbacks are typically in this 0.38 to 0.5 most of the time. In the worst case scenario, we could pull back here. And so if we see that Wyckoff method start to take place, we could see a pullback all the way to 4,900, which would obviously destroy a lot of accounts. That is a huge pullback in the market. But those are a couple big picture things you need to pay attention to. Let's go to SPY to start to look at a little bit shorter time frame scenarios. So let's go to let's stay at the weekly first. The first thing we want to look at, so we've been talking about this for a while, that this was most likely a peak. I have not changed these. These have been here for a while, guys. We've been talking about, if you're not subscribed, if you're not watching videos, do it. We've had a crazy track record right now on the channel. And so also when I'm doing these, I do these Friday videos. Tell me what stocks you want me to cover. These videos are for you. I'm giving you my digestion on the market and what I see happening. But let's also cover the stocks that you are interested in. And so the first thing, we are testing, almost back testing, I call it, the 50-day on the weekly. So when we go back, we were having a lot of trouble around this 50-day. Before, when we made last week's video, we said, okay, we came back almost to the 50-day, which I said in the videos. We came back up and then we broke below. I would say that breaking back above the 50-day and holding it is essential for us to know, is this correction over, or are we going to turn into a longer term three ABC pattern, I'll just call it, correction on that 4th wave pullback. Corrections do happen. So if this 3rd wave would sometimes continue, sometimes you can have a XYZ pattern, a short XYZ pattern. I don't believe that's what we're having here. But we need to see this 50-day on the weekly is really important. When we zoom out at the RSI, we did, where's the 40 at? We're just about at 40, which we know in the past is a really important level. We keep talking about this. So if we see a little short squeeze, like I said, guys, everything is connected. Everything tells a story. Let's see if we actually get a little short squeeze here. I do believe there's a high probability for the next 2 weeks that the market does get short squeezed for a while. And that's why we're going to have to start paying attention to that Wyckoff and ABC pattern on Elliott wave. It will be very, very telling if we go up and we get rejected at some levels we'll talk about in a second, that this weekly chart is most likely headed to an oversold position, and we're probably hitting an ABC. If we look in the past, let's actually look at 2022. So we have 1, let's call 2, 3, 4, 5. Or sorry, A, B, could be a C, it could be a 5-way pattern. Anyway, going back to this chart, I got distracted for a moment. Let's zoom in a bit here on the daily. So if we do start seeing a short squeeze in this next week, the one thing we want to pay attention to is the 20 SMA on the daily, which is now seeing a really large decline. So if we see a short squeeze, this is probably going to meet the 20-day somewhere in the middle. Depending how quickly this thing moves up, we could see higher at, like we just mentioned before, guys, the bottom of the range. We did not get, honestly, a true break below and a test of the range. Kind of when we were talking about the Wyckoff pattern, looked at it again, right? It breaks below and it comes up and tries to test it. We honestly don't see a great picture of that. We saw a big flush, and maybe we're coming back to test this. And that's maybe where we meet the 20-day in this kind of range right here. We kind of have 2 different areas of the bottom range, right? Like you could consider this candle the bottom of bottom range, which is at 575, or you could consider 580 the bottom of the range. So that's what we're going to want to look at, this 5 75 to 580 is going to be a very important number. Let's just put a chart here just to see if we predict it next week. Let's put a circle here. We always like to put circles on the chart to see if we can actually speak it into existence and see if it actually happens. So that's what we're really going to be wanting to pay attention to. Does that actually happen? And if it does, then, you know, we probably are going to hit one, ready, A, B, potentially a C. I don't think we're going to a bear market. The main reason is because stocks have pulled back so much. We have stocks like 50% off their highs, right? Like some of these growth names like Hood, HIMS, PLTR, Google's already way off their 52-week high. We see Amazon coming up against resistance, already about like 15% down. And so even though the overall market is only like 10% down, we are seeing some legacy names not pulled back further, which makes me think this is not a 5-wave bear market. Rather, this is probably an ABC correction. And so this is what we're going to watch out for. Do we go towards that 20-day? If we look in the past, we also see this little area of indecisiveness for a moment, which is also at the 575. So 580 to 575, guys. That's what we're going to want to look at for next week. If it gets there, if there's some positions you are not, you don't feel like a ton of conviction, then you might want to either size down some of those positions if you do have gains on them, or if you are up really big on positions, I'll say maybe write it out. In the worst case scenario, if you don't have convictions on positions, if you're starting to get back to break even, maybe if you're down a little bit, you might want to start considering closing those positions out and only holding what you have a ton of conviction on. If we do see this really big short squeeze over the next week or two, then we could be headed down for I would call it the last wave correction, which on the weekly chart we started talking about, like, okay, we could pull back. Actually, let's look at that real quick. Let's just do it for shits and giggles. I think the 200-day, no, we gotta go to the weekly chart. Oh, guys, okay. This was accidental, but look what we found here. Look where the 200-day is. 572. We talked about where's the 20-day coming back to. Let's go back to the 20-day. Where's the 20-day coming back to? Oh, it's coming back. Another really important pattern now that we're talking about it. 17 minutes in the video. Okay, we're not going to be able to cover a ton of stocks. Maybe we'll make it let's make it a 30-minute video. If you see the 20 or the 50-day and the 200-day cross, that is a very bad sign. So if we see that this 200-day flattens out and we see a big deceleration in the 50-day, just call it over the next couple weeks into the end of the month, and we cross below the 200-day, that is a really bad sign. And after maybe a little bit up here, consolidation, making up its mind for, say, a week, if those cross, then I would say that almost guarantees, not guarantees, but it's a high probability that we're heading to the next wave down. Okay, we're going to skip the Qs because it's basically the same chart. The next one I want to go into is the semiconductors. Semiconductors was actually holding up really well. And so this is very bullish for my case that we are in an AI super cycle, and chips and semiconductors are the core of that super cycle. And so seeing these things hold up so well, still in this upper pattern right here, right? Like we came down and touched it. That's really bullish. And so now we are on the daily. Let me go to the 20 actually, because it's a little closer. But we have this big resistance zone here. So very similar to the SPY. If we see this thing come back to 232 and fail off the 20, right? Like I said, fail off the 20, then this could move down and do a lower low. And so bullish case and say, actually, this was a pullback to the bottom zone. We are now heading to a bullish back to bull. We see here, it comes back down, maybe hits this support line, right? And then we hit a higher high. And then we probably break out of this trend line as well. That's really bullish. That means we now have higher lows, and we can have a pattern maybe start to establish higher lows, like something like that. So that's what we're going to want to pay attention to. If this hits here and cannot break out, and we start to see a lot of uncertainty in the market again, I'm probably going to maybe even close out of some of my semis or reduce the positioning, because if we do head to a second lower, you know, we could head down to this 200-ish range. I think it's on the, let's see if the 200 here. I can't remember if it's the weekly. Yep, it's the weekly. So if we go to the weekly chart, something that we've been talking about for a while for this, again, we're still in a really large bullish cycle for this. There's nothing that's telling me that we're still not bullish on semis. Semis honestly have been sideways or down for the last 2 years. And so if we do go down right now, I don't think we have too much more downside. And so if we do come here, then we come back down, I am still looking for this long-term trend line to be tapped, as well as the 100-day. So just call it, if we do see some short squeeze to the upside to this range, these things start accelerating for the next couple weeks. We have a pullback to about 205. Just call it 2 to 207, which is in line with the 100-day and really big support. If the semis can hold this bottom range, that is extremely bullish that we have a super cycle continuing and semis potentially breaking out of their sideways downward pattern they've been in the last 2 years. And we'll see that last super cycle wave up for semis. So that's something we're going to want to pay attention to. Let's get to some stocks. A couple actually big stock names I want to cover first, you know, Mag 7. The first one is Google. And the reason I want to cover Google first is trying to figure out if we've completed this 5 wave or not. Let me find this real quick. I thought I had it up here, but I do not. Here we go. So let's call 2020 the low, right? We got 1, 2. I can't tell if this is the 4 or the 5, but I'm starting to feel like it might be, because we are really close to getting below the 1. If we get below the 1, that means that this is the 5. If we don't break below the 1, and we don't break below the if we don't break below the 1, then, and we just call it, we hit this 100-day on the weekly, then the cycle for Google is not over. But if we did break this trend line, if we look on the daily, we are below all the SMAs. So there is a bit of negativity there, but this is something I'm looking on Google. If Google's bull phase is over, then that's going to have some negative impact on the NASDAQ, the NASDAQ, at least in the short term, because if we see more selling pressure here, then we might have that second wave lower. Second one I want to look at is Amazon. So Amazon's down a bit. The main thing with Amazon, let me go to the daily, is it's having a hard time getting back above the 200-day, around 200. So we're seeing this big consolidation here, which again, when I'm talking about we might have one more leg lower, this is telling me if we can't get above the 200-day and hold it, come back down and test it, then we are going to have a one leg lower. And right now, the overall market is still following the Mag 7. It's still following NVIDIA. It's still following the lead of Apple, of Amazon, of Microsoft. And so if we can't get above this, I could see something like this rally a little bit into short squeeze and then cut back below. That's a really bad sign, saying that we still do have an ABC correction lower on the overall markets, which will pull down everything. PLTR, let's get to some stocks that are pulled back substantially. So we broke below this trend line. We broke below this trend line, but then we came back above, and now we're testing a really important level around 85. Let's see what it can do here. Let's pull up some closer time frame SMAs. So 20 days decelerating significantly. Let's see if it can get back above the 20-day at around $91. We're going to call it 90 because it's probably going to decelerate a bit more to about 90. So if this thing comes up, rejects the 20-day, that's really bearish. I would say for like these short-term pullbacks, these ABC waves we typically see, if stocks can't get back above the 20-day, that typically tells us that it hits it, goes back lower. We'll see it on AMD stock in a second, which is just been in a pain for a while. But we see these, if it stays below the 20, then we are starting a correction phase. It's testing the 50-day right now. 50-day honestly is not as important for me, but the 20-day I'm really curious on. 200-day is still way lower down here, which means this guy is still in a really healthy spot. I would love PLTR to come down back to the 50s. Even if it can close this gap all the way up 41, if it goes back that far, I will consider buying this stock. I'm not really into playing these stocks that are have ran up, 800% in 2 years or something. So I'm waiting for some of these stocks to pull back substantially, and that gets us to HIMS. HIMS is something that I believe is a long-term winner. We talked about it a lot on this channel. I made a long-term video on why I think HIMS is a winner. They got a hit piece this week. There's some negativity in the stock. On the weekly chart, right? Like, we're still a bit away from all the SMAs. Like, this stock has been away from the 50 for way too long. It does need to come back and test those things. We tested the 20 on the weekly and it bounced off of it. So let's see if it can hold it. Say we get a little relief rally here, right? And we come back up, maybe. Okay, guys, it's so important to look at a lot of different stocks to see the patterns we're seeing in the market. And right now we're seeing 20s decelerate on a lot of stocks, and we see a wide gap between 20-day. That typically says that a short squeeze is probably going to happen, and we're going to want to pay attention to see what happens if these stocks can get back above their 20s. If they can't, HIMS is a great example. We've seen these come up, hit the 20-day, hit the trend line, hit the really big bearish or resistance, and then come back down, right? And if this thing comes back down, like, we're going to look for that 20-ish, 25-ish range. Again, why? A couple of reasons. We have a ton of support down there. And we look at the 50-day. Guess where the 50-day is at? $23. By the time the stock gets down here, it's probably going to be close to $24, $25. If this stock gets down to $24, $25, I'm buying. That's where I originally missed buying this stock at. Now that they have their Q1 projections out, even if they grow a little bit less than they're expecting, 50-60% growth for this stock, this can be a winner into this last phase of the bull market, into 2026, if not longer. We'll see what happens, but it could be another 2 to 3 years on that fifth wave, depending. Next stock, AMD. AMD has been in a dumpster fire. A positive. Ready? Let's start with some positives with AMD. The positives is in this really big market pullback, right? Let's call it. Basically, it's been at the end of February, the stock was at $99. It went in a low of 95, and guess where it's at? It's back at, what is it actually, after hours? It's actually at 101. So this stock is basing a bit here. And guys, this is what I keep telling you with semiconductors. Semiconductors have been in a bear cycle for many years. Almost one whole year. Top of 2024, we've been in a 1 year correction. 1, 2, 3, 4, 5, maybe. Just making some shit up, but that could be a 5-wave pattern down, guys. And so it's really good to see AMD consolidate down here when the rest of the market is flushing. That's really bullish for this stock, that we are near a potential bottom, assuming we have that last wave of the super cycle, which could, like I said, be a 2 to 3 year push, and this thing could get back to all-time highs. We've been away from the 20-day for a while. The 20 is at 103. So let's see. This has, even though the market's been getting pushed up higher, AMD has not. So not as much downside, but not as much upside so far. What I would love to see, I have a pretty big position here. I've been thinking of trimming this, assuming we have one more wave down. And so I've been looking at the 20-day on the weekly, because the last time we touched the 20-day on the weekly was October. That is a lot of months. And the 20-day is at 120. So if we get a short squeeze, maybe get a little bit news, this thing will continue to decelerate over the next couple of weeks. If we can get this stock, just call it 110 to 115, I'm probably going to trim. If it gets to 120, I'll probably just trim most of my position for now and then rebuy in on the next wave down. But if we get a little around to 110-ish, I'm going to do some trimming. because I think this thing could come back down, right? Like we're seeing this downside, but if this thing gets up above to 110, it come back down to the 103, we could have seen a bottom in AMD. Not for sure, but we could have seen a bottom in AMD. So those are some things to look out for. Let's do the last one, Uber. We're going to make a 30-minute video. Let's get through this quickly. Uber, everyone knows, if you've been watching my videos, I'm super bullish on Uber. It's a winner. Had some bad news come out, some people lowering price targets and such. I think with some of the uncertainty about consumer spending, people are getting nervous, but I'm all in on AV. This is not financial advice. I own Lyft, which I might sell out if it pumps back up to buy it lower on the next wave, if we do get a next wave lower. But I own Lyft, I own Uber, and I'm going to probably build a position larger in Google. And if Tesla pulls back more, I'll probably go in a position in Tesla because I am so bullish on AV. Assuming we have 2 to 3 more years left in this bull cycle towards the end of Trump's presidency, AV, I would say at the end of this year, going into end of 2027, that's going to be a huge year of growing adoption of autonomous vehicles in terms of ride sharing. And so I'm really bullish on this category. I bought this guy back down at 60. If it goes lower, I'll buy some more. I'm very, very bullish on this stock. Guys, we're at 30 minutes. Thanks for watching that video. Let me know if you like this content. Otherwise, let's succeed in the market. You got it. I got it. Let's do it together. Have a good weekend.